Hello, classy class and accounting nerds. I hope you're all doing amazing and I hope you have had a good start of the day today. Today's accounting topic is T accounts and ledgers, right? It's the same thing, but the way we started this topic is from how the elements of financial statements are accounted for. Then we did an example, and then I wrote the journal entries from the same example. And now we'll continue this example and solve T accounts and learn T accounts or ledgers, right? So let's get started with it. Let me first tell you um, how the T account look like, right? And what are the components of a correct T account. So let's take this red marker, dark red marker. Well, let's just keep it not that bold. All right, so let's create a T account. Let's create a big T. So I tell you about the components and you know what the T account mean, right? Okay, so the left side of the T account is called debit. It's very objective. You cannot ask me like why, right? This is how it is, right? Why do we call A and A? It's just that way, right? So no questions. It's just an objective thing that you need to understand, right? So the left side is called the debit and the right side called the credit side. And here should come the name of the T account. For instance, in the previous example that we have here in the journal, you can pick like any one account. I think let's pick an equipment name just for the sake of an example, right? So I'm gonna write equipment here because this is gonna be the name of this ledger or T account, right? So equipment, debit, credit. So what's gonna come here? So if in the journal entry, the equipment is being debited, right? For instance, equipment is being debited according to this example is 12,000 for 12,000. So I'm going to write 12,000 here towards this line of T, like towards the end of this column. I'm going to write 12,000, right? Or I can like write simply the amount because I'm telling you the structure of T account. Here comes the amount and here comes the dual effect. Dual effect. Dual effect account name, right? And here comes the date, okay? And same goes towards the credit side as well. So if the equipment is being credited in the journal entry, this all should exactly look like this, but on the credit side, right? That's about T accounts. This is the structure of T accounts. So let's solve an example according to this structure. I'll go back to the journal entry, which is the first one where the bank is debited and the capital is credited. So this means I'm going to create two T accounts, one for the bank, one for the capital, and then use this amount to solve it, to create, to enter my amounts. So bank and capital, I'll go to this page. I'll drag down. I'll create one more T account, right? Like that. I'm going to keep it a bit small because we are like actually. So this is credit. This is debit. The name is the bank. The amount was 25,000 because my bank was being debited. So on the debit side, I'm going to keep this 25,000. And the dual effect was capital, right? And it happened on 1st May. So I'm just going to write 1st May. Okay, that's about it. That's all. We have solved the T account for my bank entry, right? So another T account will be created for in the name of capital, right? Because according to the journal entry, we have like two accounts. So this one will be called capital. This is debit side. in here debit, this in here is credit side. And in my journal entry, my capital is being credited, right? For 25,000. All right, no problems. We're gonna just enter 25,000 here. But then here, I'm gonna write the name of the dual affected account, which is bank, right? So in the bank's T account, I'm gonna write a reference for capital because this is a dual effect against this bank. And in the capital account, the dual effect is the bank account, right? So I'm gonna write bank in here, and it happened on 1st May. Was it 1st May? Let me check again. Okay. It's okay. Let's assume it was on 1st May, but according to example, yeah, it was 1st May as well. Here. So we have solved the first journal entry. The second journal entry is equipment and house supplies. House supplies is being credited. This is the liability account. I've already talked about it in the last video where we solved it, where we solved the example. So house supplies is a liability and it's called an AP account. Let's just forget about it now because we're solving the ledgers. This time I'm going to create equipment and house supplies T accounts. Equipment. Equipment is being debited for 12,000. House supplies is the reason why the equipment is being debited. Okay. And let's just say it happened on 3rd May. All right. It's just 3rd May. Let's create another account for the house supplies. Stick here because this is important. House supplies, because from here, then we are going to learn how to balance these accounts. And then we're going to move to how the trial balances are created. Okay. Do debit here. House supplies was credited for 12,000, and the reason being the equipment that we purchased. Okay, and it happened on 3rd May. That's it. Okay, we've solved 2 journal entries. Now this time it's cash and bank. Cash is being debited. Bank has been credited for 150. Cash debited. 2 more T accounts. Let's call it cash. Credit, debit, cash has been debited for 150. The reason being the bank. And let's see it happen. Let's say it happened on 1st May. All right. So this time I won't create a new account for the bank because I already have one account for the bank. So I'm just simply going to use it. So in this journal entry, the cash was debited for 150 and the bank was credited for 150. So bank was credited for 150. The reason was cash, and it happened, for instance, on which date? On 5th May. All right. This happened on 5th May. That's it. So if I already have an account, right? And I see the journal entry affecting that account, I'm not going to create a new one. Okay. I'm simply going to use that one. So I might have like 10 entries on the debit side of the bank account, bank T account, or like 5, 7 entries, or like how so many entries on the credit side. And then at the end, when we will be creating a trial balance, we're going to just balance off the accounts, right? Balance the debit side with credit side. It should just be equal, and then take those balances to the trial balance. This is how it's going to happen, right? So in this journal entry, I just created one account because I already had one. What's the next one? WAN and bank. WAN debited bank credited. So when debited for 6,800, reason being bank, let's say it happened on 7th May, and the bank was credited for 6,800. So I'm going to use the same account, 6,800, right? The reason being purchase in when, and it happened on 7th May. Perfect. Next entry is JRO's and equipment account. JRO's account is being debited, 1,100. JRO's is debited for 1,100. Reason being equipment. Let's say it happened on, let's say it happened on 9th May. All right. And then equipment is being credited for 1,100. We already have an account for equipment, so I'm going to use this one, 1,100. Reason being what? Reason being JRO's. Okay, and it happened on 9th May, for instance, right? What's the next one? It's house supplies and then equipment. House supplies is debited. House supplies is debited. House supplies is debited. I've got the amount. Okay, 2,300 and then the equipment. 2,300. Reason being the equipment. For instance, it happened on 10th May. And I already have the equipment account, so I'm going to use the same. I'm going to do 2,300. I'm going to use the house supplies account, which is the dual effect of this one. All right, and it happened on 10th May, for instance. Yep, we're good. Now it's time for bank and JRO's. Bank debit, JRO's credit for 1,100. Bank, I already have the bank account. Happened for 1,100. Bank is debited for 1,100. The reason being JRO's. All right, got it, got it. I know how to solve the accounts, so I'm confident. Let's say it happened on 12th May. And then I think we also have an account for JRO's. Let's find out. Yeah, here. So now JRO's will be credited for 1,100, reason being the bank. It happened on, for instance, 12th May. 12th May. Yep, sounds good. What's the next one? We just got left two. When debited, bank credited. I think we have the accounts for both of these, so we're just gonna put in the values. Van versus bank for 4,300. Van 4,300 versus bank, and it happened on 15th, right? For instance, and bank will be credited for 4,300. Here is the bank account. 4,300, reason being when it happened on 15th. Yep, looks good. So you see we've got like so many transactions in the bank account. The last one, it's the house supplies being debited for 97 and bank being credited for 97. So we have got both of these accounts. So we're just going to put in the value. It's simple. House supplies debited here for 97. What's this? 9,700 debited, reason being bank. For instance, it happened on 20th, and the bank is credited for 9,700, reason being, where is 97? Reason being house supplies. House supplies. And on 20th May. Okay, so this is how we have just solved the whole question. These are all the T accounts that we have created. So in the next video, I'll show you how we can balance off all these accounts, because we have got like more than one values in these accounts. So how we are gonna balance off the accounts, I'll show you in the next video. We are gonna just sum all the values on the debit side, sum all the values on the credit side, and then see what's now how much is the difference, and then you're gonna adjust that difference in the T account on the opposite side. And that's how we're gonna balance it, right? And then in the same next video, I'll show you how we can create the trial balance from the balances that we are gonna get from balancing these T accounts. Until then, just watch this video and solve your own questions from your textbook, right? And just feel confident about the T accounts, because this is the core of the accounting cycle. And I'll also discuss what the accounting cycle is. I think I haven't yet done it, right? So stick to this video and practice your T accounts from using examples from your book, okay? Till then, goodbye. I'll see you in the next video. Bye.